Hi everyone, and thanks for tuning into another episode of Budget Investing. So today I want to give you a quick portfolio tracker tour and what I use and how I use it and why I think it's very important to make sure that we're always tracking everything that's going on with our accounts. After that, I have a couple stocks that I want to show you that I think are undervalued for July and something that you should maybe take a look into, as there could be a great buying opportunity for you or any other budget investor. So to give a quick tour of my portfolio or my tracker, I want you to just take a look here in this portfolio balances section. So it's pretty straightforward, but it's fun. It gives me all my info kind of all in one easy peasy stat. So of course my total account value, the amount of cash that I have sitting in my account waiting to buy another stock, the daily change, so if it's gone up or down, I can see that. My unrealized gains, which of course is that piece that allows me to know how much money, if I were to sell all of my stocks today, I would make, which works out to be about an 11.5% gain, which is pretty dang nice, I think. Of course, from there, I have the total number of shares that I own, my average cost of all of my shares. If I was working on this full time, that's what my hourly salary would be 52 cents an hour. So of course, this isn't my full-time job. I haven't been very profitable up to this point. And this is my annual dividend income. So this is roughly how much money I will make on dividends this year, which will give me about one either decent sized stock or two or three smaller. Of course, from there we have the monthly dividend income, which is nice to see as it goes up and down. Hopefully in the long term, it'll be a little more consistent quarter to quarter with each stock and across my portfolio, but I've been making some adjustments and selling something. Moving over, of course, I have then the holding performance. So this is each stock on a percent scale of how well they're performing. You can see over here on the left hand side that these are typically mainly my financial stocks. So they've been doing really good. Of course, my best performing stock total is CIBC here in Canada. And then of course, as you go down, you have a different level amounts of performance for each stock. I only have a couple that are in a little bit in the red. So I have BIP, which is just a utility company. I have AQN, which is another utility company, and then from there I have CNR, but I do think CNR is still a great long-term hold. It's just in a little bit of a dip, so that's a great buying opportunity for me because I can dollar cost average down. Now, one thing that you've probably seen on my portfolio over the last little while is this big graph that goes across, and then on the top here it says Enbridge. And then over on the right hand side, this is my Enbridge, and this is all the info that you would need to know about Enbridge. So I can go in here, I can pick any stock that I currently hold. So I'll be like, hey, I want to know what Home Depot looks like. It'll go in, and as you see, it loads, and this is what's gone on. So this chart here is the last year of that particular company. So it's been really nice. It gives me all the info that I need kind of in one spot. I don't have a dollar value on here, as it's just not something that I'm able to do in Google, but I can see a rough trend. Of course, in the last year, Home Depot has gone up drastically. This is the last 3 months or so. A little bit of a dip from that all-time high, but I mean, you can't keep going up forever. From there, of course, then I have this dividend monthly info, so I can pick whichever month I want and be like, how much money did I make in this particular month? So I can go back to November. And I'm like, oh cool, I made $7 in November in 2020. Same thing to December, and so on and so forth. I can go all the way through. I can look at any month. So of course, right now it's June. I've made $15 so far. And the rest of these charts should all be fairly straightforward. It shows you exactly how much I've made or what's been going on. So it shouldn't be anything too crazy, and hopefully is fairly self-explanatory. Now, from there, I have this overall portfolio tab. So it breaks down where all my money's in the different holdings, within my different accounts, how much I've contributed, the market value, the amount that I've gained, percent gained, dividends, and then so on and so forth. This just gives me one really easy snapshot where I can see if how much money I'm making and what my yield on cost is. So it's great once I can get a few years under this one. This one will really start to show how things are going. From there, my next tab is called the My Investments. So I break everything down for each stock. It just lets me know exactly what's going on. So I have the account that it's holding in, the ticker symbol, the sector, the current yield, the 5-year compound annual growth rate of their dividend. This is the live PE ratio. You'll see that there's a couple stocks in here that just don't pop up on Google Finance for whatever reason, which is fine. Then I have my dividend schedule, when they pay me, what country that's in, total number of shares, quote, market value, and of course average price paid, the cost that I paid, which is nice, so I can compare it really easily. So like, you know, if I go back to the second row of RioCan, I've only put about $400 into it, but its market value today is $550. So that's really nice. That's great profit for me. The part that I really like on this here is the portfolio change from last close. So how much I've made on all of that particular company since the last close, and then the change of the individual stock. The next tab over would be my total profits or losses, and then total profit or loss per share, and then that percent growth, which is really nice. You can see I've got a couple of really big winners here in RioCan and CIBC. Again, all my financials have grown over 20%. You know, would have been great if I put all of my money into these, but of course you can't predict the future. And this is my annual rate of return. The shorter that I've been holding a particular stock, the wonkier these numbers might look. As you start to hold them longer and longer, it gives you a more accurate view of what this rate of return will be. And then this little section over here that I really like, it's those same charts that I have back on the dashboard that you saw, but it's the 7-day, 30-day, 90, 180, and 365-day chart. So I can see kind of a very quick snapshot of how this stock has been performing. So again, sticking with RioCan, you can see 7-day, it had a bit of a dip. 30-day, it's still going up. Same with 90, and I'm going all the way back to a year ago. This company's been basically just doing nothing but going up, up, and up. It makes things a little easy without having to dive into numbers too crazy. My next tab that I have on here was the transactions tab. So I can see every time I've made a purchase, how much it cost me, and what I paid per price of share, and how many shares that I purchased, and the dates that I bought them on. It breaks down this the compound annual growth rate, total number of stocks that I have, and then the average price that I paid for all of those stocks. And then it goes all the way through for every single stock, so I can track everything really closely. Next tab I have is my dividend earnings. So it breaks it down in the columns. It's each different company, and then I show exactly how much I got paid in each particular month, and then at the very bottom it totals it up. So again, sticking with RioCan, I've already made $13 this year from RioCan. Of course, they did have their dividend kind of cut at the beginning of the year, which is fine. It's understandable, but I know this is something that they will likely either increase, or at least it's a great income stock for me. $2 every month might not be a lot, but it does add up over time. And I go all the way across for all of the different stocks, and I can see how much each one's making. And it gives me an easy snapshot to see if, hey, did I make more money? Did I make less money? It just gives me a really easy way to look at everything. And the last tab that you might see is my chart tracking. So this is where I put all of the raw data into that all of the different tabs pull from, so that I can see everything in nice easy spots. It just makes my charting really easy. That's the where my money's growing chart, and then it breaks down to, you know, Canadian versus US, and then my sectors, and then all of the different sectors broken down individually, and it just really breaks everything down for me into nice easy pieces to digest. So now I'll jump in and show you 3 quick stocks that I think are a little bit undervalued right now. And the first one would be Canadian Tire. Now this is basically a Home Depot type company, or like a Lowe's, but here in Canada. They're kind of like a supermarket, and they do a lot of just outdoor retail and activities. So of course in the last month or so they've been going down. They haven't been looking super great in that capacity, but this is a company that's been growing for a really long time. They're a dividend aristocrat, so they're growing their dividend rapidly, and they've been doing it for quite a while. Their PE is kind of low right now, so the overall market isn't valuing them too much. But again, if you would have bought this way back in December, you get about a 30% gain, which is really nice. And of course, just in this last little while from that all-time high, they have dropped down almost 8%. So there's a great opportunity for you there. I do think that Canadian Tire has a ton of potential. They may be a little bit limited because they are here in just Canada, but they do have a lot of diversity. You know, they have a credit card, they have some gasoline, they own companies like Mark's Work Warehouse, and they do parts, and there's just so much that they do, but I really do think this is a company worth taking a look into. The next company that I would point out, and I pointed out way back in my June video, but what's undervalued, is Stella Jones. So this is a raw materials company. So again, they're up 39% on the year, but they're still trading fairly low. Their PE is also right around that 13 mark, so they're quite low. They're not at their 52-week high of 44, so they're a little bit lower. So they have been trending down recently, but I still think with all of the booming economy when it comes towards housing and everyone looking to do home renovations and building their backyards up and things like that, I think there's still a lot of money to be made in people having to buy those raw materials or telephone poles and so on and so forth. 5G has been a huge boom for communications companies, so there's just a lot of potential there as they're going to continue to need to supply all of those raw materials for everyone. So I would recommend take a look into it. This could be an opportunity for you to diversify into some industrials or raw material companies. All right, and the last one that I'm going to point out is Enbridge. So again, this is a company that I pointed out back in June. They haven't had a big upswing in the last little while, so I still think they're undervalued a little bit right now. Their PE is around 16, which isn't terribly low. It's about what people would typically call normal. But the economy has been floating around that 20 to 25, even starting to creep up towards 30 PE range. So with them being down at 16, that's quite low. Again, I know the hesitation when it comes to buying an oil and gas company, but Enbridge is one of the largest energy producing companies in the entire world. So you can't get caught up on the oil and gas piece. Again, it's that energy side of things where I really do believe that they're going to make that transition into more renewables, and they've started that process to some extent, but they are still obviously really heavily in oil and gas. But they're not going to just shut down the entire company and why it's so profitable when it's still working today. We still need those resources coming out of the ground, but they're still investing into renewables, and I really do see them becoming a leader in this category. So I wouldn't write them off at this point. I would take a look into them, get a little bit more information, but I would really look into it. It's a great income company for yourself as well, because they do pay a quite high dividend. Currently it's around 6.8%. It's almost 7%. So at $40 a share, that you get quite a bit of money coming back your way. It wouldn't take you that long to get all of your money back through dividends. So take a look into it. There's a lot of potential here as they look to make that transition to the next generation of energy production. So thank you very much for watching today's video. If you liked it, please do subscribe, thumbs up. I know there's a lot of people that watch these videos that haven't subscribed yet, so it really does help me understand what is something that you're looking for and what you're not looking towards. And if there is a particular topic that you want me to go over or anything you'd like to learn more about, please do let me know down in the comments. I would love to have that conversation with you and maybe make a video about it to kind of help other people out. Otherwise, thank you so much for watching, and I'll see you in the next video.